Hi guys, happy Friday. This is bdorfman with LBC Capital Income Fund. You're probably gonna get to see this video not on Friday, but it's a good day and I'm wearing shorts. Please subscribe down below if you haven't done so. I'd like to see your comments on this. I went a little bit aggressive with this video, but I want to talk to you about risks and stability, about people trying to manage their money, buying stocks in stock market and going for above average return. Over a long period of time, S&P 500 returns 8%. Say you're a trader, you want to go more aggressive than that, or even with S&P 500. When we're talking about long-term, we're talking about long-term. Market can drop today. Just read a piece from Ray Dalio, and he said that 50% drop in a portfolio in a year or overnight, you have to recapture 100% of it back. Okay? So think about it. You invest $1 million, you lose 50% on day one, on year one, you're going aggressive, Tesla stock drops 50%. It's absolutely normal. Or if you're doing something more aggressive like crypto, right? So your starting point from $1 million, if you lose 50% is 500,000. To get back to $1 million, you need to make it up in 100%. And I want to compare and contrast with stability, with a steady income that accumulates over the years. Okay, LBC Capital Income Fund. So real numbers, and I'm doing hypotheticals for aggressive investments, and I'm doing actuals going back 12 years in history for LBC Capital Income Fund. Let's roll. So, $1 million assumptions, $1 million invested in LBC Capital Income Fund. It pays you 8.5% per year. In reality, it's a little bit more because it compounds, okay? Stock market, okay, or crypto, or some aggressive investments. If you're looking to exceed the return, I put in 15% yearly target. Again, it's gonna fluctuate. Nobody ever gets 15%, but let's say somebody's really gunning for above average return in stock market over a certain period of time. Okay, so these are the assumptions. So LBC Capital has a steady return. You're making 8.5% on your investment year after year, and this return compounds and accumulates. Okay, the compounding is not part of it, but the actual figures are more. So January 1st, 2023, we start with $1 million in LBC Capital, 8.5% return. Stock market, crypto, January 1st, 2023, you start with $1 million. You lose 20%, you invest 800, you lose a little more. Basically, at the end of the year, assumption is you lose 50%. Okay, 2024, $1,085,000 in LBC Capital. This is that proverbial scenario where you lose 50% of your portfolio. In January 2024, you had $500,000. To make up that 50% loss, you have to make up 100%, okay? 2025, same return for LBC Capital, $1,177,000. Your 15% assumption for stock market aggressive investment is $575,000, okay? Let's fast forward a few years, we're in 2028, 5 years passed. LBC Capital is $1.5 million. You're about 875, making 15% return in stock market. Again, it doesn't account for accumulation. 2029, your stock market, you're back to 1 million. It took you 6 years at 15% yearly return to get to $1 million. And again, let's say it averages. There's no down years, or you have higher return, you make 30% one year, you lose 5-10% another year. Basically, it takes you 6 years to get back to 1 million. Okay, you lost 500 overnight. LBC Capital, 1.6 million. Let's fast forward 2034, January 1st. So 10, 11 years passed. 11 years passed, LBC Capital, you made 150%, $2.5 million, okay? 11 years. And if you think 11 years is a short period of time, time flies. Remember what happened to you 11 years ago, and what were your plans, where you thought you're gonna be today, for good or bad, right? 75 kids, well, 7.5 kids, 2 SUVs, you know, time flies, things don't always go as planned. This is steady, this always goes as planned. You doubled your money from 29 to 34 at 15% return, you're $2 million, okay? There's a lot more stability, there's a lot more known here in 11 years. This is a known factor. Over here, you're $2 million, but assuming you're making 15% average for the 10 years after your initial drop, it's, I can run the scenario if you start off at $1 million and don't drop to 500,000. Obviously, these figures are gonna be much higher. This is gonna be like 5-6 million, but in reality, nobody makes 15% a year over a long period of time. So there has to be drop either here or here or here, and the sooner the drop happens, the tougher it is to recover. This is especially extremely important for people that are about to retire. Even if you invest in S&P 500 going for that 8% return a year, it's for a long period of time. You know, market can correct itself to 20-30% really in a very short period of time, as we saw it time and time. Again, 50% is a little drastic, but for the purpose of illustrating it. At the same time, averaging 15% is also difficult. So take it for what it is. This is stability, this is steady. You know, $1 million gets you to 2.5 in 11 years. No stress. You kind of lose sleep over this and may run out of Xanax. It's a very nice chart from now on. Another thing, imagine if you add 100,000 a year over here or more, $10,000 a month. So this is a pretty cool scenario divided by 10 if you want to simulate it for 100,000. Email me if you want to see it in Excel format. I'll send it to you. Let me know down below if you want to see any more simulations. I want to do a video on how to get you from 0 to $1 million using all possible means, investing, 401k from the company, savings from your salary, you know, kind of small investing, really from 0 to $1 million. Let's see how long it's going to take us to get there. And yeah, comment down below what you want to see next time, what you think about this example, and subscribe if you haven't done so. Boris Dorfman, LBC Capital Income Fund. Thank you, guys.